Welcome folks. Today we're going to talk about NIO stock. As you guys know, the stock has been on an absolute tear over the past few weeks. In this video, we will delve deeper into the reasons for the soaring stock price. Now, a little more than a week ago, JP Morgan came up with a bullish report on NIO. Their analyst, Nick Lai, upgraded the stock from hold to buy, taking his price target to $40. Now, the primary reason for his bullish forecast is due to the booming Chinese EV market, where NIO is the leading domestic manufacturer, trailing only Tesla. Nick Lai expects EVs to comprise over 20% of the overall Chinese vehicle market by 2025, which will be up from only 5% today. Now, a shift in consumer preference and the ever-falling prices of batteries are the main reasons why he thinks EV sales will surge. And of course, he expects NIO to lead the market. Although Tesla is currently selling more cars than NIO in China, there is a very good possibility that NIO will eventually overtake Tesla to become the local market leader. Now, following the overall market trend, NIO's monthly and quarterly sales are skyrocketing upwards. Month after month, they have been setting records. In September 2020 alone, NIO delivered almost 5,000 vehicles, 4,708 cars to be exact, which is up 133% compared to 2019. Third quarter 2020 deliveries increased 154% to 12,206 vehicles, and sales in the first 9 months of 2020 have clocked in at more than 26,000 vehicles, which is way more than double 2019 delivery numbers. Now, those are very impressive numbers indeed, to be sure. Moreover, NIO is expected to become the winner in the premium segment of the Chinese EV market, which should definitely help the profit margins. This is a very similar strategy used by Tesla in the US market. Very smart. Now, let's talk about an important battery feature. One of the main differentiating factors of NIO's EV vehicles, along with a few other Chinese EV makers, is the ability to swap depleted batteries. This is one party trick that no other EV maker in the West has. Although Tesla showed off this feature several years ago, they have not brought it to market. It is doubtful whether they ever will. This battery as a service feature sets NIO apart from other EV makers in two distinct ways. The owners get access to the latest battery technology, if they choose to do so, and it saves a lot of time at the charging station. This quick turnaround at the battery swap station could become a major winning factor in busy Chinese cities, or for that matter, any busy city around the world. In fact, we think that this battery swap feature could become a major competitive advantage for NIO and a few other Chinese EV makers in the coming years. Now, although most people would charge their EVs at home or maybe at the office, the fact that consumers may be able to buy their EVs and their batteries separately could definitely help expand the overall EV market in China, thereby again helping NIO sales. The big question is, will Tesla bring this feature to the Chinese EV market or not? Only time will tell. Now, let's get into the revenue and other figures. On August 11th, NIO reported that its second quarter revenue was 3.72 billion yuan, which is more than double compared to 2019, and most importantly, 220 million yuan more than the market expected. No wonder the stock has been flying high. For the third quarter of 2020, NIO is forecasting revenues of between 4.05 and 4.2 billion yuan, which is more than the analyst consensus of 3.53 billion yuan. If they're able to meet their target, it definitely should help the stock. Lastly, let's talk about the quality and design of NIO's vehicles. NIO ranked highest, that's right folks, highest among all other brands on the EV market, even beating out Tesla. According to JD Power, NIO had 109 problems cited per 100 vehicles, which is followed by Tesla at 113. We truly find it astonishing that NIO was able to beat out Tesla in the quality front. As for the styling of the vehicles, NIO is considered the front runner among all other Chinese EV makers in the design front. Although of course it lacks Tesla, leading the pack of Chinese EV makers is no small feat, given the number of electric vehicle manufacturers that there is in China and how fast most of them innovate. Therefore, to sum it all up, given the current trajectory of vehicle deliveries, NIO's market positioning, and the overall hyper growth of the Chinese EV market, we definitely see bright prospects for NIO stock. Over the coming weeks, we will go deeper into NIO and analyze the stock in further detail. And we will also be doing a video on the potential pitfalls of NIO stock. Please subscribe to our channel so that you don't miss out. And remember, folks, a deep and thorough analysis of any stock that you plan to buy is always a great idea. And we would greatly appreciate if you can provide feedback to us in the comment section below as to what you liked or did not like about our analysis of NIO stock. See you folks in the next stock market analysis video. See ya.